Good evening from central London, and today we are looking at 2025. Will it break landlords as we, of course, end 2024? So, I've had a ton of questions come through, especially with so many live that we have been doing over the course of the last few weeks. And I just want to put that all together and really address quite a few landlords' concerns, whether you're looking to sell your properties, to exit the market, where you're looking to expand, or whether you're just looking to see how you navigate the new legislation. Today, we're going to see it all, the good, the bad, and the ugly. So make sure you stay tuned. We're going to be looking at different articles as well as some questions that are being sent across to us live, but also some questions that have been put to us over the course of the week. So thank you for jumping on. As always, if anyone who's on live can tell me that they can hear me properly, see me, that would be absolutely amazing, just so we know that we don't have any technical problems. So I'm just going to crack on. And again, today we're going to be looking at things from EPCs to legislation to inflation, how that's going to impact interest and buy-to-let mortgage rates, and so much more. So I'm excited. This possibly is going to be the last live video that we're doing before the end of the year. Okay, great. So first up, we have an article by Landlords today, which is 2025 could get very ugly for landlords. New warning. Now, by the way, this isn't just doom and gloom for landlords. This is really about sort of showing a little bit more clarity as to what's happening in 2025. So please, if you see these, I know these titles can be quite scary. This is certainly not a strategy to do any kind of scaremongering for anyone. So keep that into consideration, and we're going to be sharing some good news as well. Okay, it is the good, the bad, and the ugly. Okay, so great. So we have here a prominent property analyst says that next year could get very ugly for landlords. Doug Shepherd, editor of Home.co.uk website, warns that recent Bank of England report suggests that personal financial circumstances for renters and lower income households deteriorating, albeit only slightly, with rent arrears showing an upward movement. Add to that the problems faced by landlords in the southern half of England, in particular highlighting In Home's latest housing market snapshots and position looks very challenging. So Shepherd's data suggests that rental growth across England and Wales is actually just 0.8%, but this masks vast regional differences. Rental growth in some parts of north of England is in double digits, while London typically rents have actually fallen in the past year by 1.9%. Now, we will be looking at this in terms of region if we have some time, because the reality is that the market is hyper local. It does do the different things depending on regions, even depending on neighborhoods. Even London as a whole can be doing different things, from prime London to greater London to south to north. But overall, it is agreed that the speed at what rental growth has been increasing over the course of the last few months is certainly slower than the last 3 years. But we've got to put things into context. So what we've seen over the course of the last 3 years, at least here in London, is at least a 30% increase. And that's double digits every year for the last 3 years, easily. Now, when we say that rental growth is slowing, we're seeing kind of a more of a normal market. So a lot of people start getting scared, landlords or investors saying, "Oh my God, rental is going down. Rental prices." Well, no, rental prices are not going down. They're slowing, and they are slowing within context or perspective, slowing down. They're slower in comparison to the last few years that we've seen. So that is rental growth. And a lot of people have been asking me as well with regards to sales growth and capital appreciation, which we're going to dive into as well, because I know that there are a fair amount of landlords who are planning to exit the market and are kind of trying to figure out whether right now is a good time or not. Okay, cool. So if we go back to the article, we are looking here. Indeed, in two London boroughs, the City of London and Hackney, the rent falls over the past year have been in excess of 9%. Now, elsewhere in the home market report, which paints a depressing, if accurate, picture of life as a landlord right now, the sales market is shown to be affected by the sell off of buy to let properties. And that is the real challenge there, that as more properties are being sold, the more challenges this is going to be, this is going to contribute to the rental crisis right now. Tenants right now don't have a huge amount of choice. They have more choice than what they did sort of a year, 2 years ago. But if we put this again, sort of pre-COVID times, they don't have enough. They don't have enough choice. And what we had seen as well was that a lot of tenants who were looking to get onto the property ladder perhaps now have to wait a little bit longer given the changes in the budget, which we saw back in October. So elsewhere in the, so Shepherd's writes, whilst expectations of lower interest rates going forward have boiled confidence in the sales market, fears of increased taxation and restrictive legislation persist, especially among landlords. So consequently, we expect landlords to continue to offload their least profitable properties, thereby adding to sales supply but reducing rental availability. And this is a good point because a lot of people are saying, oh, landlords are selling properties, they're out of the market. Well, a lot of these landlords actually have more than one property, and they may have 5, 8, 10 properties, and they're selling off those properties that are no longer profitable or perhaps are posing more of a risk given the changes or the legislation that's going to be coming in 2025 with the renters' rights bill. Certain properties may pose more of a risk because they may be attracting a certain type of tenant that they don't want to be able to, they don't want to manage that type of property anymore. And which brings me to another point, that there are certain areas and certain tenants that are going to find it more and more challenging because of this legislation. It's cause and effect. So listen, today it was about Q&A and answering questions. So I'm going to go through some of these, and as we go through the live stream, I'm going to jump into the articles that perhaps are relative to the question. I hope that helps for people who are on. Okay, and by the way, this is being recorded, so if you're just jumping on and want to sort of look back at what we've discussed so far, you can do that, and it will be on the channel. So if you haven't subscribed, make sure you do. Okay, so we have a question here from Sonia. Danny, are rising interest rates on buy-to-let mortgages making it unviable to refinance? Well, that's a great question, and I'm going to answer that by an article, an interesting article, which I had come across, and I hope that this helps to answer. Because one thing I do know is that buy-to-let mortgage, here's Sonia's question. One thing I do know is that buy-to-let mortgage, whilst it's still high in comparison to pre-2021, it's certainly not higher than what it was a year ago. So we need to put things into perspective, okay? So Sonia, I hope that this is going to be helpful in terms of emphasizing what I've just shared with you. So buy-to-let mortgage market actually improved in 2024, claim. So buy-to-let mortgage improved in 2024 over the last year, says Lenders trade body of UK finance. It says the cost and interest rates pressures, which forced a sharp contraction in buy-to-let market through 2023, has eased. So house price lending to landlords grew by 13% to £10 billion, as with the residential sector. This growth was a response to the lowering of new mortgage rates through the year, says the body. Okay, so, but it warns that for 2025, however, conditions look more challenging. The introduction of an additional 2% stamp duty surcharge announced in the autumn budget will act as further deterrent to a market which already faces heightened regulatory and taxation challenges. And that is a fact, because I've spoken to a lot of landlords who were thinking about expanding their property portfolio. Now, those who have deep pockets, this hasn't deterred them completely. And yet what it has done is slow them down. And others who don't have that deep pocket, perhaps was just getting onto the buy-to-let market, that has perhaps deterred quite a few of those. So the stamp duty surcharge, that increase from 3 to 5%, I would say is the biggest impact to those landlords looking to expand. But when it comes to buy-to-let mortgages, they have been able to make those numbers work. Now, I know that some renters and people don't like the term of buy-to-let being labeled as a business, but that's exactly what it is. And that's what government has pushed this to be even more, because gone are the days where perhaps if you were looking to subsidize your pension with a buy-to-let property and just have one property, for a lot of people, those numbers no longer work. It only works if you have the property incorporated and you're treating that as a business. Then those numbers start to work. And the reason I point this out is that these are the landlords who are actually growing their portfolio, those landlords who are treating it as a business. And to the point, with business, you have good years and you have bad years. You have years where your profits are up. You have years where you're properly breaking even. And dare I say it, you may have some years where you're making a loss. So it always amazes me when I see landlords who have had a good 10, 15-year run and had a great run at that, been very profitable, and then suddenly we have 3 or 5 years of high mortgage rates, and then suddenly they say, this is not worth it, when they've had a 15-year good run at it, when they've had 15 years of cheap money. So this may be a phase that you could probably ride out the wave, but of course that's not necessarily possible for a lot of people out there. But if it is, a long-term rental buy-to-let investment continues to be a viable business. I hope that answers your question, Sonia. Let's go back to this article. And a lot of people do ask me, but why, Danny? And that's for 3 reasons. It still has the 3 buckets, which is you have you have a cash flow from the property investment that you have, hopefully. The debt is being paid by the tenant. And third, and the most important one, is capital appreciation. And we're going to look at capital appreciation, what we can look forward to in the next year and potentially in the next 5 years with capital growth across the UK. So while sector continues to adapt to meet these challenges, we do expect buy-to-let purchase activity contract more generally across all mortgage lending. UK Finance says that with rate and cost pressures continuing to ease, the outlook for 2025 is for a gradual improvement in mortgage affordability, feeding into the market growth. As interest rates tick down, it expects arrears to continue to fall. So James Tatch, head of analytics, UK Finance, says that the mortgage market showed greater than previously expected resilience in 2024 as cost and rate pressures began to recede. Affordability constraints did impact external remortgage activity, but strong competition, retained customers meant that those coming off fixed rates could find a new internal product transfer deal. So in 2025, we are forecasting continued steady growth to both house purchase and remortgage lending as affordability improves further. The prudent underwriting standards in place for the past decade have helped most customers who might have fallen into difficulty. So look at this. We have, hopefully you can see this, we have predicted year-on-year change 2025 compared to 2024. Gross lending 260 billion plus 11%. Lending for house purchase 148 billion plus 10%. External remortgaging 76 billion plus 30%. New buy-to-let purchase lending 9 billion down 7%. Internal product transfer 254 billion plus 13%. Arrears down 5%. So I promise you it wasn't all going to be bad news. I promise you good news, and you be the judge on whether I've delivered on this. One thing to also point out is that a lot of property professionals had expected the mortgage rates to come down at least towards the end of 2024 and throughout 2025. And that is happening. The challenge is that with the budget announced back in October, that is happening at a much slower pace. And of course, we have, if I'm not mistaken, a meeting of the Bank of England tomorrow. Now, we are not expecting much to happen. A lot of people, a lot of property professionals at least, are expecting that the rates to hold as is. So let's see what happens. So, guys, what else do we have here? I promised questions and answers, and let's jump on to the next one. So, would be great if you can let me know, will rental growth continue and can it offset increasing costs? So, great question, Stephen. Yes, based on the data that we've been seeing over the course of the last quarter, rental growth will continue just at a slower pace. Of course, everything has a ceiling and it needs to be in line with wage growth as well. I believe I had an article somewhere around here with regards to rental growth. So if you just bear with me, hopefully I'll be able. I can't find that, but perhaps this will help you answer this question, okay, with regards to rental growth. But what we have seen is rental growth go up in single digits as comparison to double digits in the last few months, at least. But here is a continued economic uncertainty sees both tenants and landlords seeking longer term tenancies. So there will be rental growth. And what we do see is once landlords and tenants have a relationship, and what we're seeing is that tenants are staying on average 4 years in tenancies now, we are going to see that, of course, those renewals are going to be lower than market rate. But still, if you're sensible, and I get this lots of times, by the way, with landlords. So landlords, of course, naturally want to be able to keep a good relationship with their tenants and keep those rental rates low so they can have a better relationship, and they know, tenants are looking after their property, paying on time, and all these things, and that's fair. And what I tend to see is sometimes some landlords having those rentals 20, even 25% below market rates. Now, if you are in a financial position to do that, amazing. And most landlords that I know, they are not in that fortunate position. Number one. Number two, if you're a landlord who then suddenly finds yourself in a position whereby you need to sell, and if you have a tenant in situ, of course, you're going to be selling to another investor, and you haven't kept those rental reviews up to date, that's going to be an issue. And you're going to find yourself in quite of a pickle um, selling that property, but most importantly, selling it at the right price. So I always say, of course, keep rental rates lower than market rates with your current tenants, yet keep it within a certain percentage, which normally is around about 10%. That's a win-win for both parties. So win for the tenant. The tenant goes out to see a similar property or the same property in the same unit in the same building is going to cost them 10% more. They know they're giving you a deal, that you're giving them a deal, and in the same way, you're not put in a financial risk. I hope that makes sense. But yes, we are seeing rental growth, and if we look at the index with, I think it was HomeLet, I believe it was, from November, we can see here change monthly, it went down by 1.5%. But if we see this from an annual point of view, we can see it's 2%. But that's 2% over the course of the whole of the UK. Again, that's going to change by region. I know when it comes to London, I think we're above the 3%. And when we look at north of England, you're getting closer to around about 7 to 8%. Let's look here, Northwest. Northwest, we've got annual change of 5% and change monthly here. So I hope that helps in terms of rental growth. Now, what else do we have here? What's the cost of updating? What's the cost of updating to meet EPC requirements, and is it worth it? Okay, well, with the EPC, and if you haven't had a chance to review a video that we did last week, which was specifically on EPC, it's proven to be very popular. I would say go back and watch that, especially Wise Process. and that goes really in depth as to what you should expect with the new proposals of Labour, with the EPC that has a lot of landlords considering exiting the market or very worried as to what the financial implications means for them, which is exactly to your question. It depends. It depends on the property. Is it a period property, a period conversion? I think a lot of new units, at least, are going to be okay. And yet, what we do have is that those proposals, I believe, to be to be kicked in 2030. So there is time. So the best thing that you can do, wise process, I can't speak to your property. Every property is different. And it could be upgrading anything from your loft, your windows, your doors, your boiler. It can be one of or combination or all of those. So it really depends on the property. I can't really speak to how much it's going to cost for you. What I can say is how a lot of landlords are thinking of financing this. And some of this is, of course, if you're a savvy landlord, you'll be putting some money away for a rainy day. If you've been in the buy to let industry for a while, some are going to be paying it that way. Some are looking to refinance and pay it that way. Some are saying that they have 5 years to increase the rent and start getting the money and accumulating the money from there. So there are, I hope that helps. There are some options there in terms of finance, but I can't speak to your specific property wise process. Okay. Hey, Danny, nice to catch you. Thank you, Jonathan. Good to catch you too. Is now a good time to sell or should I wait? Oh, this is a popular question. So it really depends. It depends what region in the country you're in. It depends on, first of all, if you're looking to sell, I'm going to assume that you've done your homework and you're deciding to sell because of a real risk or because of a real reward that you're going to get. You're going to put the money elsewhere. You need the money for something. I hope that you're not looking to sell just because the renters' rights bill is coming in and you've got Section 21 being abolished. And oh my God, what I'm going to do, this is going to be chaotic and this isn't good for me. Well, why isn't it good for you? That would be the first question that I would ask, Jonathan. I would make sure that you are selling for the right reasons. You need the money for something else? Fair enough. Okay. But don't be put off buy to let just because of the renters' rights bill, because it's more scaremongering than anything else. Yes, there are compliance. Yes, there are rules. Yes, there are regulation and legislation that you're going to have to adjust. And if you don't have the time to do that, then get a property manager. If you do have a time to do that, then make sure that you educate yourself. You join a organization of landlords, rental properties where you can have all the education and really dive in so you make sure that you're not putting yourself at risk. But as long as you take action, there's nothing for you to worry about. If you're just going to bury your sort of head in the sand and hope for the best and not educate yourself or pass it on to a property professional, then you probably want to sell because you're going to end up in trouble, I promise. So number one, okay, so you've decided to sell. The next point is selling a property right now. A lot of people, of course, are saying about the stamp duty and want to get ahead of it. For me, that time is gone, especially if you are getting a mortgage and especially if it's a leased property. It's very rare the properties that I've seen that that you close within 12 weeks, and pretty much 12 weeks what you have. Yeah, we're middle of December. It's Christmas now. Have you tried to get someone to do something in the last few days? And as we go into the end of this week, it's almost impossible. So you got 12 weeks at best. And I tell you, it's a fine line. For me, that ship has sailed. So if you're not sold right now, I would say putting your property on the market for Boxing Day, which is one of the days and one of the weeks that people are most online looking to buy a property. If you get your property online on the market within the next week before Boxing Day, absolutely it's a good time to sell because your property is going to have more eyeballs during that Boxing Day week than any other week in the year. Okay, from that perspective. Now, if you're going to sell and wait to spring, I always say to make sure you do your homework way before and perhaps beat that spring market. Because spring, what happens typically is that you're going to get, you're going to be missed a lot because there are so many properties that are launched during spring. You might get lost in the crowds, is what I'm trying to say. So I always like to say, if you're going to sell a property, try to do it before spring. If it's spring, is it a huge mistake? No, it's not. I usually find sort of February and the end of the year, sort of, when I say end of the year, sort of October, November, typically sort of a slow month. But there you are. I hope that helps, Jonathan, with regard to should you sell or should you wait now? Or should you wait? So, how will proposed rent controls measure impact profitability? So, rent control is an interesting one. Actually, before I go on to you, Leslie, to your question, let me share with regards to Jonathan's question. On the should you sell now or wait? Because there is a article that I had up here with regards to the current sales market. If I can find it, I'll share this with you. Cloud and Horizon of the UK. Okay, I think this probably is going to be an interesting one for you, Jonathan. I promise you guys in-depth Q&A. So here it is. So budget uncertainty and tax changes clouding the horizon for UK housing in 2025. So if you wanted to place a bet on the future of the UK housing market, the first few months of 2025 would not be a good time. Consumer confidence will be brittle. President Trump will have just taken. What was this article? Let me have a look at this. So what does Knight Frank expect for 2025? So we revised down our forecast marginally last month, but predict modest price growth across residential markets. The reassessment followed a rise in mortgage rates triggered by the budget, which saw the government's financial headroom narrow and the risk of inflation increase. By the way, if you're following inflation, you will know that inflation has crept up in the last few days. And it's not something that I'm going to dive into right now, but certainly something for you to be aware of. Okay. So the budget targeted the private sector more aggressively to fund the public sector with measures that included the hike in employer national insurance. And I think this is the big one because a lot of people are concerned as to what's going to happen, how it's going to impact these companies. Are they going to continue um, to employ people? Are they now need to go? Do they have to make cuts and so forth? So that is a concern for the economy, at least. However, despite the current mood of wariness, the private sector will increasingly adapt by taking evasive action, according to Savas Savary, chief economist. He believes this will reduce the impact of the tax hikes announced in October. The reality is that the exchequer will not raise as much as the chancellor claims. It will from her budget, and the economy will not be affected by new fiscal policy. So there you go. So first, the nil rate band stamp duty reverts to £250,000 from £125,000. It means bills will rise by £2,500. A similar reversion means up to £6,250 in additional stamp duty for first-time buyers. Mortgage approval climbed to an 18-month high in October. So my guess is that between a quarter and a third of non-doms will leave, but the pace may be slower than initially thought. Some will just ride it out the next few years due to schooling or business interest in the UK. This is more for the prime London sector, of course. Okay, so I hope that's a little bit more helpful for you. And where do we have here? How will proposed rent controls measure impact profitability? So, some of you may be aware there was a demonstration in London with regards to pushing the rent control. A lot of people upset, a lot of people finding it challenging, and of course, you know, renters and families finding that it's not fair. And I totally get it. I've said this before and I say it again. Those double digit rent increases that we've seen over the course of the last 36 months, it's not sustainable. And yet, is this the decision of landlords? Is this something that landlords are deciding to do, getting all together and planning this and, you know, forming a monopoly and increasing rents, greedy landlords? No, I don't think it is. It is this rental crisis is at the back of the shortage of housing, shortage of affordable housing, to be even more specific. And quite frankly, that's not the responsibility of landlords. Government has failed time and time again to deliver the number of housing that we need. Population continues to increase. Even if we look at London specifically, population continues to increase. There was a period of time when it did slow down, but now we're again starting to see those numbers creep up. And if we look at and this is a global problem, by the way, because if we look at the population and if we look at the number of people living in urban areas, we are told that half of the population are living in urban areas. So be that 4 billion of us are living in cities or surrounding these cities. And then that number is expected to increase by 2050 is expected to increase by double that amount. Now, we're not prepared for this. Now, we thought that, you know, when we had this race for space and everyone was leaving the city during the pandemic times, and, you know, this was the new trend. Well, that trend hasn't continued in the masses, at least. It is there. And of course, you know, every person will have different appetites. But in general, it's not. And more people are coming into the cities, and those housing, so the housing supply is simply not there. So talking about proposed rent measures, so let me share with you an article with regards to rent control. Latest control grab by politicians. So latest rent control grab by politicians slammed by industry. When was this out? 2nd of December. So around about 10 days ago or so. So the latest bid by politicians to introduce rent control has been widely condemned by experts. The Housing Scotland Bill passed its first stage in the Scottish Parliament at the end of the last week. Instead, it contains substantial measures seeking to introduce private rent controls, provoking the Scottish Property Federation to reiterate its claim that the bill still fails to adequately acknowledge and address fundamental challenges facing private rental sector. So this is in Scotland, of course. Now, the one in London is something that's also being pushed, and I'm going to if I can find it. With the rent control, the only rent control that I know so far has been from Sadiq Khan, which hasn't been necessarily rent control, but it is providing affordable housing for public sector. So we talk about nurses, people working for the NHS, bus drivers, and so forth. Which I don't find that being a bad thing. If I can find this, it can continue going budget uncertainty, tax changes, rent rises, rental yields, and then you have this one. Yeah, what I can say is that rent control is a bad idea. When we look at Scotland, what we do know in Scotland is that rent increased substantially when these rent controls came in place. Why was that? Well, this were different factors, but one of the biggest was that a lot of landlords got up and left. so, so this has a negative impact for, I would say, every stakeholder within the rental market. We've seen this in Scotland. We saw this in Argentina, I think it was, whereby the latest president there or prime minister reversed rent control, which was a complete disaster. We've seen this in Sweden. We've seen this in different countries where it doesn't play out very well. I don't expect the government to do any type of rent controls. At least I haven't heard of any of these so far. Now, whilst we're talking about these rent controls, let me share with regards to the license, because Labour slammed by NRLA after caving into activist demands. So you've got governments plans to make it easier for councils to introduce landlord licensing schemes have been slammed by main rental trade body. Now, what this article is about is that the government has given power or proposes to give powers to the council to be able to put licensing schemes at their will. Now, the issue with this is that the Renters' Rights Bill is coming in 2025, next year, in the next few months, which has a data of landlords, which is going to help councils make better decisions. So there seems to be an overlap here between the powers that they're giving councils and what the government is proposing to have data to be able to facilitate these councils. So it's crazy that it seems to be doubling up, and it seems to me, and based on this article, that this is nothing more than having a cash cow for councils if the data that they require is going to be provided via this database that the Renters' Rights Bill is going to provide for them. So crazy. Now, what else do we have here? And by the way, to emphasize this point, this article goes on to say that the data from 2021 to 2023 shows that 7 of the top 10 most proactive councils issuing improvement notice to private sector landlords did not have selective licensing schemes in place. This clearly demonstrates that licensing schemes do not automatically lead to higher levels of enforcement by councils. So what they're saying with this is that it was a very small percentage of councils that implemented improvements or forced improvements to landlords. There was a very small percentage of those that were under a licensing scheme. So what else do we have here, guys? We have more monkey business. Danny, Jonas Powell's only has 2 tools in his toolbox. One is a lump hammer and the other is Stanley knife. Okay. Interesting. Let me circle back to you on that one. More monkey business. Okay. Let me digest that a little bit. So we've got Stephen James. Also, is the short-term rental market more profitable than traditional tenancies? What are the risks? Oh, great question. Because in 2025, we have seen a fair amount of long-term rental properties being converted into short-term rental. But of course, you've got to weigh up the risks. And the risks are, first of all, you got a bunch of regulations that you should be able to comply on. Let's start from there, whether it's your mortgage lender, whether it's your head lease, or whether it's the council. So you've got a few of those there to begin with. But then obviously you also have risk in terms of financial and being able to manage a property efficiently to be able to make those numbers viable. Okay. So you've got 2 and by the way, if you haven't already, there is a video on this. I think this was published around about 3 weeks ago. So make sure if you haven't already, subscribe to the channel and make sure you go back to that video, which is, if I'm not mistaken, it's short-term rental vs long-term rentals, and that goes into depth. But as an overview of this, if I remember correctly from the video, is that you should be able, from the long-term rental, you have benefits like peace of mind, long-term tenants, and knowing that every month you know exactly how much you're going to get. Of course, if you have a tenant that's been vetted, a tenant that is financially stable and continues to pay the rent, but in general, you will know exactly how much you're going to get on a monthly basis. But even if you didn't have that type of tenant, making sure suddenly that tenant didn't pay, making sure you have the right insurance in place will guarantee you knowing what you're going to get every month. Number one. The type of property management that you're going to have for that particular property is going to be absolutely less than with the short-term rental. You might get the odd leak here or there, and your tenant might call you maybe once or a couple of times every quarter, if that. Looking on a short-term rental, the problem that you have there is that if you don't have a proper setup, you may be having to visit the property 5 times a week to get the property prepared, or even if you had a cleaner to inspect the property, that could be a good thing or a bad thing. You're in the property more times than you would with the long term. Any problems that arise, you can be quick to fix them. It is very much a hands-on approach. Now, whilst you may be able to get more money from it if you're managing it properly, there are going to be months or weeks that perhaps you don't. So there is a risk attached, like everything. You get more money, but then there is a risk attached to it. Make sure you watch that video. That video will be very helpful for you to be able to decide on whether a short-term rental versus those long-term rentals. And of course, there is a link on the description if you did want to book a call with myself. Happy to jump on a call and find out what your specific situation is. So, how will renters' rights bill affect landlords like me? Well, it depends totally on the current tenancy that you have. This wise process, yes, wise process. It depends totally on the type of property that you have. What I mean by that is, first of all, if it's attracting the right type of tenant. And what do I mean by that? Well, the type of tenant that pays your rent. Uh, and also, it depends on whether you've run a tenancy health check on your property. What does that mean? Well, there are, even before the renters' rights bill come into play, there's already a whole bunch of legislation that you should be compliant on. Now, you don't have to wait until the renters' rights bill comes into legislation to actually ensure that you're compliant with all these other things. That's just like the cherry on top. So you should be able to run that through. Now, if you don't know how to do that, again, we're going to provide a link on the description for a tenancy health check. I think it will be under the free resources. And if you look at the free resources, there should be a tenancy health check there. Make sure you download that, go through it. If you're not happy with what you've seen and, in comparison, you're cross-referencing, feel free to book in a call with us. We also run a free tenancy health check. We'll jump on a call together. We can run through it together. It's what I do on a daily basis, and I can spot some major challenges within the first 10 minutes of going through that with yourself. Hopefully that will be helpful to you. So there you are. Lots of free resources for you, wise process. Daniel Cullen. Evening, Danny. Hope you're well, mate. I am good. Thank you very much, Daniel. Hope you are too. And thank you for jumping on. What do we have here? Just about to issue my first Section 21. Well, I'm sorry to hear that, but at the same time, it's a good experience for you. Make the most of it. Section 21 knows the tenant's fallen out with her guarantor. So without the guarantor, I can't get rent guarantee insurance. Okay, that is true, Daniel, but you should have taken the insurance out before you signed the tenancy with them or before you renewed with them. So regardless of the guarantor not being able to pay now, that shouldn't affect your insurance. With your insurance, you should have got it before. I hope that makes sense. I'm sure you know that, but just for people who are listening in. Okay. So unfortunately, going into the future with all regulations coming down the pipe with R, RRB, I can renters' rights bill. I can't have properties without rent guarantee legal cover insurance. Absolutely. And you shouldn't. And this brings us into another conversation, by the way, as well, which is the rent in advance. So a lot of landlords are understandably, depending who they're renting to, it could be students, are understandably nervous of renting out property to the whoever's made the application. And yet, one thing that helps them make a decision or give them some type of comfortability of peace of mind is getting rent up front. And sometimes this is 6 months, sometimes this is 12 months in advance. Now, the issue with this is that whilst this can give you some comfort for the first 6 months or 12 months, what happens beyond that can become challenging. I've known landlords who say, yeah, if you pay 6 months in advance, I'm good. They pay the 6 months in advance, and then suddenly the tenant stops paying. So the rent, what I'm saying with this is the rent in advance shouldn't be a substitute to getting the insurance. It should be an add-on together. If you get rent in advance, insurance, and a guarantor, really those are the three you should be aiming in today's world. Because again, going back to videos that we have published, if you look at the number one mistake landlords are making, it will be this specific one, would be not vetting your landlord, your tenants properly before granting a tenancy. And secondly, making sure that you are safe and that you are covered on all angles, because there is a way where you can be covered. You just need to be sensible and know what you're doing. Now, I'm going to add this last point on this within this umbrella of tenants and bad tenants and so forth. With the Renters' Rights Bill, there will come a time whereby landlords can no longer collect rent in advance. So that's why the insurance is going to become so much more important. I mean, it's important now and it's critical, but it's going to become so much more important. Okay, guys, what else do we have here? Then you can good luck with that. It's 8 months backlog in the courts. Yes, it is, and that's the issue. And I think I'm going into politics here, guys, with the Conservative, who were in no way, shape, or form landlord friendly. They have their I forget the name now. Obviously, the Labours have their versions of renters' rights for reform, and then the Conservative was, what was it? Was it Renters Reform Bill? Yeah, Renters Reform Bill. So the Conservatives' Renters Reform Bill, they were a little bit more sensible, whereby they were going to abolish Section 21 anyway, the so-called no fault eviction. For those who are not familiar with it, with that term, with Section 21. In that they weren't going to do that until they had the courts sorted out, which was a sensible move. And Labour's coming in like a bull and abolishing Section 21. They haven't done it yet without addressing this fundamental issue. So, yeah, unfortunately, I mean, truly, good luck, Daniel. I hope that you can get that moved very quickly. Now, one thing to point out, this may not be very popular, guys, but I've seen it happen, whereby depending on the situation and the challenges you're facing, you're probably better off paying your tenant to get out of the property. I know, a shock. I know a lot of people are I'm going to backlash on this. How dare you, Danny, even say that? But in some situations, you're probably better off. So maybe that can help you, Daniel. And if you need a recommendation for a solicitor, we have solicitors that deal with this specific situation, which I'm sure will be helpful. If you need, just reach out to me, Daniel. How will the Renters' Rights Bill affect landlords like me? Anthony, we had this question, and it depends on where you have your property, and it depends on what you're doing about it. The way it's going to affect you right now is get a plan, speak to a property professional, have a tenancy health check of where you're, or if you have one property or several properties, have a tenancy health check of all your properties. Make sure you're compliant right now and what you should be doing, the steps you should be taking to be compliant. How do I do this, Danny? How do I do this? Go onto the description, download the resource, the free resource link, and you will have a tenancy health check there. If you're not happy with that, happy to jump on a call with you and go through it together. I hope that's helpful. So I think right now is a good time for me to expand my property portfolio. Can you recommend any areas worth looking at? Oh, one of my favorite questions. I think I had an article about this actually. Bear with me one sec, James. So Stephen's question is expanding any areas you can recommend. Let's have a look here. Okay, so we have an article here which talks about yields, and I think this would be a good article to review together with regards to any areas to explore. So here you are. Where have rental yields climbed the most so far this year? So what do we have? Highest rental yields. This increase is due. Okay, so analysis currently stands making an increase of 0.5%. England currently stands at 5.2%, making an increase of 0.5% since the start of the year. By the way, guys, for you guys in London, it was really challenging to find any property in London 4 years ago that was more than 4.4%, 4.5%. Over the course of the last 2 years, I'm seeing more and more above 5% for those of you who are in London who are considering the capital. So this increase is due to the average national house price rising from 294,000 in January to 300,000 in September. Okay, and the rent rising to 1,200 to 13 plus. Highest regional yields. On regional level, it's landlords in London who are benefiting from the highest yields, currently standing at 4.9%. There you are. So I know my data, I know my market. 4.9%. And again, I've seen quite a few that are above this. So 4.9% is the average. So this is followed by the Northeast at 4.8%, Northwest 4.6 in Yorkshire, and so forth and so forth. So strongest regional growth. London has also recorded the largest. Let me have a look at something quickly here. This was on the 12th of December, guys. Okay. So not to say that I'm feeding you old data. So London has also recorded the largest increase in yields since the start of the year, rising by 0.19%. This is due to the capital's average house price rising from 511,000 to 525,000, and the average monthly rent value rising from 2007 to 2,145. By the way, this is Greater London, certainly not Prime London. So meanwhile, yield growth in the East, England 0.11%, followed by the Southwest 0.8%, and so forth. So the rest of England's regions have seen yields shrink since January, none more so than Northeast, where they're down by 0.19%. Yorkshire and Humber, I've been hearing a lot about Yorkshire and Humber, by the way, minus 0.8%, Northwest 0.2%. Suggested local growth, an analysis of LA district data shows that some areas of England have seen significantly higher yields. So there you go. City, Westminster. This followed by strong growth in the city of Westminster, Kensington, and Chelsea, and Islington. Outside the capital, the strongest yields boosts have been in Melton, Dartford, and Isle of Wight, and Stockport. The highest yields. I hope this is helpful with regards to if you're looking to buy a property, where is the best place? Landlords who want to protect and even bolster their profit margins have the opportunity to integrate technology. Blah, blah, blah. I'm not sure what that's about. A bit of a selling pitch there. So I hope that's helpful. So we have quite a few areas, a few regions for you to look at if you are looking to expand your portfolio. One thing I will say if you're looking at the capital is that the capital appreciation in London is a bit funny and different to other regions of the UK. So typically, what London does is it stays flat for a few years. That could be 5, 7 years, and then suddenly it just booms for like a year or two, and then suddenly falls flat again. Think about crypto. Crypto sort of just does nothing for like a year or two, and then boom. Now, unfortunately or fortunately, depending on which way you look at this, it hasn't done much in like 10 years. And usually it doesn't take that long. And this has frustrated quite a few investors and perhaps, decided to go out. So for anyone buying property right now, I think London offers a great opportunity because although it's been flat, hasn't done much, it hasn't crashed. It has dipped in some places and then sort of spikes again a little bit, but overall seems flat over the course of 10 years. Now, if we look at prices in real terms, and this goes for the whole of the UK, but especially London. If we look at real terms, taking into consideration inflation, of course, there has been a price crash because everything else has increased substantially except the prices. House prices haven't really increased in line with everything else. That's not going to stay like that forever. And I think 2025 may be the year where we start to see this turn a corner. And I'm not saying we're going into any type of boom. We're far from any type of boom, but certainly seeing more transactions and seeing more of an appetite of buying, more affordability. And that's what we're already seeing signs of that as we go into 2025. Of course, there is an artificial market happening because of the stamp duty deadline, but that is something that I foresee going into 2025. I mean, I know that we had Saville's forecast somewhere around here, and I'm going to try and bring that up so I can. I'm a very visual person, so I know this is quite helpful to quite a few people out there. Yeah, so I'm going to share this with you. So, on the point of London, before I share this mainstream UK house price forecast from Savills, the has been overall a transaction crash. There hasn't been a price crash, and that goes for the whole of the UK. What we've seen, at least for 2023, which wasn't a great year for the housing industry as a whole in the UK, we didn't see a price crash. And this just goes to show how resilient UK property is, and especially London, how resilient London is specifically. And we didn't see a price crash. But again, in real terms, taking into account inflation, there has been. Yet what we did see was a transaction crash. And what we're starting to see going to 2025 is, and the end of 24, we're already seeing this, is that those transaction numbers have started to increase. And that is a lead indicator in terms of prices. So I'm going to leave you with this. Savills does a great forecast of sale prices and capital growth. So if we look at this here, we see that mainstream UK house price, we're seeing on average around about a 4% increase year on year for the next 5 years, making that a total of 23% increase over the course of 5 years. Housing transactions, we can see that is increasing as well as we go along. More affordability. Remember, guys, the more affordable buying properties is, the more transactions we're going to start to see. And then if we look at main UK rent, we can see on average, what's that? I'll say probably around 3% year on year on average, taking that up to 17%. That being said, I'm going to, and you can hold me to this is recorded, I'm going to say that there is going to be an increase on this. I'm going to say for 2025, I believe that rental growth is going to be higher than 4% for different reasons. But and I'm going to share these with you, and it's not exclusively because of this. But number one, we are seeing more landlords exit the market, okay, at the back of the budget. We know that EPCs are scaring quite a few landlords, and we know that the renters' rights bill is something that continue to be something that landlords are finding challenging or going to find challenging. Number one. Okay. Number two, it is that when the renters' rights bill come in and we have that change whereby we're bringing an abolishment or stop to bidding wars. This is rental bidding wars. They're putting a stop to that. Now, naturally, what happens is right now, a lot of landlords, if they think that their property is worth around about £3,000 per month, as an example, they know if they put it on the market for £3,000 and they think it's worth a little bit more, maybe between 3,000, 3,200, but they don't want to overprice it. They put it on the market for 3,000. Now, if they get a good number of applicants come through and the property does demand more than £3,000, then they'll achieve the 3,200, dare I say even more. And it's not about the landlord sort of beating people on price. The market dictates the rental price, the market being the number of applicants that come through. Applicants will, or tenants, prospective tenants will say, you know what, I'll pay you more because I know it's worth more. When the renters' rights bill come in, even if the tenant wants to pay you more because they know you're getting so much more demand and they want to secure the property, you can't accept it. That is, again, that legislation hasn't come through, but I've read the articles, I've read the data, and that's potentially what's going to come in. Now, if that does come in, and it's very likely that it does, landlords won't want to leave money on the table. What does that mean? If I think my property is worth a little bit more than £3,000, I'm not going to put it up for £3,000 anymore. I'm going to put it for £3,500. And if I have to kind of, take offers below that, then so be it. A lot of landlords are going to be doing exactly the same thing. They're going to be overpricing their property because they don't want to feel that they are going to leave money on the table. And that is one of the challenges that I foresee. And again, this is a combination of reasons as to why I think that rental prices are going to increase and more than that estimated 4% from Savills. Because overall, rental growth is slowing down and it should continue to slow down and go at a steady pace. But I think something different is going to happen, at least for 2025. Again, it is recorded. Hold me to it. Let me know what you think about that. We have come towards the end of the live. Again, a lot of free resources on the description. Follow those links, and we're always available to take any calls by booking that appointment with us. Thank you, guys. Have a good evening.